A lessee leases a vehicle for 3 years. The payment terms are as follows. 100 if the vehicle is sitting idle at the lessee's premises for the whole year. 50,000 if the vehicle is used. In addition, the lessee is required to make an annual payment amounting to 1 multiplied by the number of miles driven during the year. The lease payments are made at year end. The lessee has an option to terminate the lease after the first 2 years without the consent of the lessor, and with a penalty amounting to 5,000, that should be paid by the lessee upon termination of the contract. The lessee has signed shipping agreements with his customers for the next 5 years. The lessee has incurred 2,000 as commissions and legal fees related to the lease arrangement. The lessor has paid 5,000 cash to the lessee as an incentive to sign the agreement. The lessee's incremental borrowing rate is 6%. Figure out the lease liability and the right-of-use asset on the commencement date. Let us see what to include or exclude from the lease payments. First, the in-substance fixed payment of 50,000 is included in the lease payments because, although we have variable payment terms, it is this 50,000 that is the unavoidable payment. The 100 is not included in the lease payments, as there is a remote likelihood that the vehicle will sit idle at the lessee's premises, given the fact that the lessee has signed shipment agreements with his customers, and will be busy for the next 5 years. So here, the variable payment terms have no real economic substance, and the 50,000 is the amount that will be included in the lease payments. The example mentioned that there is an annual payment amounting to 1 currency unit multiplied by the number of miles driven during the year. This payment is a variable payment that is based on a variable other than a rate or an index, which is the miles driven by the vehicle. Therefore, this payment is not included in the lease payments. Instead, it is charged to the profit and loss. Finally, the lessee can terminate the contract without the consent of the lessor after the first 2 years of the contract. However, it is assessed on the commencement date that there is a reasonable certainty that the lessee will not terminate the contract, because the lessee will need the vehicle for the next 5 years to fulfill the shipment's agreements. So, the termination penalty of 5,000 is not included in the lease payments. From the previous discussion, the lease payments will include only the in-substance fixed lease payment of 50,000. So, let us calculate the lease liability. First, insert the in-substance fixed lease payment of 50,000. Then the lessee's incremental borrowing rate of 6%. Then the lease term of 3 years. Here are the 3 years of the lease term. Then the periodic payments of 50,000. Then the present value factors, and note that the lease payments are made at year ends, so we will use this formula. By completing the schedule, we get this figure for the lease liability, which is the present value of the lease payments. The right of use includes the initial measurement of the lease liability at the commencement date. We take it from here. The incentives of 5,000 cash received by the lessee from the lessor to encourage the lessee to sign the agreement. These are deducted. The commission and legal fees paid by the lessee. These are initial direct costs that would not have been incurred if the lessee had not signed the agreement. So, they are included in the measurement of the right-of-use asset. By adding up, we get the carrying amount of the right-of-use at the commencement date. Let us calculate the lease liability, and the right-of-use after the commencement date. Nothing new in the calculation, so we will go through the calculation quickly. Here we are. Our lease liability at the end of year 3 is 0, and the right-of-use asset is depreciated over the 3 years of the lease term to reach a 0 balance at the end of the lease term.